What's up, guys? Can everyone hear me? What's cracking? Welcome to the Wednesday lesson on a Thursday. What's up, guys? What's up? Can everyone hear me? Welcome to the Wednesday lesson on a Thursday. How's everyone doing? Lovely. Let me just turn my phone on silent here. Hope everyone's had a great week so far. All good. 7 hours of driving today though. Sure, bro. That's a far ass drive. Where were you that you had to drive that far? And big ups for you for coming to still join the stream. Oh, Frey hates, I've done that drive before. Greytown. Cool, my uncle's got a farm in Greytown. Timber farm. We'll just wait a minute or two, see if anyone else wants to join us live. Otherwise, I know a few people joining late. And some people have load shedding. Surprise, surprise. Does anyone know if load shedding is going to be a permanent thing now? I'm thinking of getting some more solar panels and a bigger inverter for the rest of the house. I reckon stage 2 and 3 permanent for the next couple of years. Wow. That's crazy. That is crazy. We'll wait for Charles' message and then we'll get going. Germany, 30 years, eh? Wow. And you'd think they know what they're doing up there. Excuse me. Okay, guys, welcome to the lesson. Let's get started now. Enough fluffing around. So today what we're going to do is look at how smart money uses correlations, okay? I do have a PDF I've designed for you guys that will go out at the end of this lesson. And it'll have all the points and stuff. Did some work yesterday drawing it up for you and going over it. But I use correlations in trading as well. I'm sure you've heard me mention it in a couple lessons. And I thought today's the perfect day to... Ooh, my power just came back on. Today's the perfect day to go over it. See, Warren was asking in the chat earlier today about the news, how the dollar affected all the markets. Well, we're going to touch on that a little bit today, as well as correlations. So with the dollar affecting the market, you got to realize that the biggest economy in the world, where let's just say most of the action in the markets and most of the volume in the markets is traded is in the US, and the US economy revolves around the dollar. Obviously its stock market and then it's inflation, and it's lending rates. So I did mention, I think it was last lesson, about the inverse relationship between inflation and interest rates, and how if inflation's too high, they raise interest rates, which causes debt to rise in price, which leaves the rest of us less money to spend on goods and services. Therefore, we know supply and demand. We learned that in school or in basic economics, that if there's a decrease in demand, price will come down, and if there's an increase in demand, price goes up. Therefore, if lending rates go up, people buy less things. And yes, slow demands mitigates printed money. Therefore, things get cheaper. And it's a balancing act that Mr. Powell, the Fed chairman, has under his fingers to change at a moment's notice. Well, they say they're going to slow down the increase of rates while inflation comes down. I'm not going to get into that too much. I'll send you guys a video I watched the other day that explains it really well, on how we can see in this year coming up, the start of the recession. And you guys remember Michael Burry, the Big Short? I follow him on Twitter. He's been tweeting his ass off over the last 6 months, saying we're not at the low yet. If we look at the S&P on the monthly, he says we haven't reached the low yet. This was COVID. This low here. And another thing I haven't mentioned, guys, wicks like this, the algorithm sees as liquidity as well. Usually you would see a wick like this get filled at least 50%. So I'm not saying this is the low, but just out of my technical analysis, this is a possible low. Okay. So Michael Burry, follow him on Twitter. He caught that massive recession for the housing market. I think it was 2009, when they were shelling out these crap loans as investment vehicles, packaging them together and selling them as investment vehicles. So then what happened? Inflation went up, and the only way to counter that was for rates to go up, and people couldn't pay their mortgages. And all those fake loans caused that massive crash. But anyway, this crash is going to be something different. It's because of the money that they pumped into the market by giving out handouts to American citizens during COVID and stuff like that, and inflating the market, turning on the money printer, as they say. But anyway, let's get back to correlations. So smart money actions get revealed through cracks in the market. I'm just going through my notes here. Trading correlations is a smart money fingerprint they leave in charts as they switch the tide of the current basically the current intermediate term price swing. So basically, how I could say this is, when trading currencies, you've got to always look at the base currency. So we're talking about Forex now, like your major pairs like GU, GJ, UJ, everything EU, everything that involves your euros, your dollars, your Japanese yen, your Great British pound, your Australian dollar, all of these here. You can find these currencies. You should have them by now. So AXY is your Australian dollar currency index. BXY is your British pound index. CXY Canadian, DXY dollar, Euro X, self-explanatory. JPY, self-explanatory. SX, Swiss franc. Now the VIX is, I'm on the monthly, so these data just don't go to the monthly that often. But anyway, you'll see the VIX and you'll wonder to yourself, what is the VIX? I've never heard of that. Well, the VIX index is a real-time market index that represents the volatility over the next coming 30 days. What does that mean? This basically outlines the call and put options on the stock market versus each other. So how many people are going long versus how many people are going short. So if you think of USD, JPY, it's the US dollar versus the Japanese yen. Here it's put options versus call options, which in the future market is, in Forex jargon, long and shorts. How many shorts versus how many longs? And this is a correlation pair to the stock market. So what would the stock market be? SPX, your US 500, your S&P, which are the same thing, your NASDAQ, which is your US 100, and your US 30, which is your top 30 companies in the US that aren't on the NASDAQ, or basically your bread and butter companies like Coke and, you know, the rest of them. So this is what I use. This one I can delete. If you look in the top left, Pepperstone, VIX, TVC, I think it's Pepperstone or TVC, Capital.com for the dollar, TVC. So if you just chop in AXY, it'll come up BXY, CXY, DXY, EURXY, not XY, but you get it. So if we have a look at the dollar, now what would be a good pair for the inverse relationship with the dollar that would be near perfect? That would be the likes of gold. Why? Because it's gold versus the US dollar. Now we can see the dollar goes up. So what must gold do? Go down. Okay. Now we can look at something like a smaller pair for the dollar. Dollar goes up. Let's see, US dollars up. Dollar goes up. US dollar, Mexican. Didn't really go up that much. We did see it come up here. Mexico could have had some news though. But we can see, using the dollar, same theory as we use with smart money concepts. We can see certain supply and demand zones get met, mitigated, break a block. See how price delivers off of these. Now, the key to using correlation would be to find a pair or an inverse relationship, a pair that follows the same narrative, or an inverse pair. So with USD at the end, so NZD USD, see how NZD goes the opposite way. So it's an inverse relationship. Using that as a second, well, an extra confluence. So remember, we're going over our trading plans. We've got our step 1, 2, 3. This is something you could add to your back testing to find an inverse relationship or a converse relationship, to add an extra tick of the box that, okay, the dollar, which is the strong pair of my correlation, is it tapping into a zone at the same time my pair that I'm looking to trade is tapping into a certain zone. This can give you that extra confidence that, okay, we've had the reversal. We're looking for the confirmation of the double entry. Is the dollar conversely relationship to that? Boom. Let's enter. Because the dollar will make the moves for most of the pairs, guys. Because remember what I said, the dollar is by what... Sorry, the dollar has... The US economy has the highest buying or selling power in the market. By far. So this is how we can use correlations. And then the same thing for Great British Pound, okay? So if we look at GJ, didn't look clean. Something like GBP CHF looked a lot cleaner compared to how the British Pound was looking. So you got to find these and also identify with Forex Factory as well. Your news and you can check all your currencies on the right hand side here when you go filter. Make sure you've got them all there. But let's just use the VIX as an example and go into S&P. I'll clear this chart. I'm done for the day on that one. But this is a little secret I want to show you guys. If you come up to the top left here, click the plus icon. See how it says compare symbol. Now you can compare to the S&P the VIX. Like this. See how it like goes on your chart and now looks messy? What you want to do is go add VIX and then go here, new pane. So then it brings it up in the bottom. Mine is set to candlesticks, so you're going to have to go to settings here, style. It will be on line to start, like this. If I can just bring it halfway up the screen, it will be on line. You can change it to candles, and then you got to change your candle settings here. But you can see how the inverse relationship between the VIX and the S&P works. It's not going to be exact, but at the same time, we'll chat about a little secret just now that I use as well. But have a look at how price, low is formed, high is formed, 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 low is formed, high is formed. Now, the correlation of a bullish divergence or a bearish divergence should occur at a confirmation level for us. So what does that mean? I can show you this right here. Look where price is here. Look where price is here. Look what angle that's making there. Inversely, we look at the VIX, where price is. Price is going down on the S&P, whereas price on the VIX is going down. But where should it be going if it's an inverse relationship? This high should be here, going up. So this is what we call a divergence, an SMT divergence. Okay, a correlation divergence. So this is another thing that we could use in helping us find entries. Now this one's on the VIX. I wouldn't use the entry. I just saw it here to show you, but I wouldn't use the VIX as say my order block in here to then go short, because I'm not trading the VIX, I'm trading the S&P. So I wouldn't have taken this position, but I can probably show you another one here. Here we go. This is one I would use, okay? High of the VIX here. High of the VIX here. Oh, sorry. Nope. Sorry, I was messed up there in my head for a second. Sorry, it's been a long day. I've been on the charts all day. So let's find an SMT divergence on the daily. You'll probably have to go a bit into the charts on the hourly, because there's hardly ever divergences in the market over the span of a month. Okay, this is the wrong VIX. I need a different VIX. There we go. But as confirmation zones go, you can be waiting for VIX to come back up into the order block before going long on your higher time frames, for sure. Here's one here, SMT divergence. See how they're equal here. We got our breaker block here. Oops. This will help you understand that, okay, we had a change in character or a break of structure. Yeah, break of structure here. So what do we look for? The breaker block. This here will help you confirm. Look how drastic this angle is and how flat these prices are here. Divergence doesn't have to be the same direction. It could just be a flat line opposed to a large increase. So we can see that this is the confirmed order block when we get that rejection candle there. See how that rejection candle there comes back here, fills in that fair value gap, and look how rapidly it moves price there. Look at this candle here. This would confirm it for you. Price is still underneath this candle here, whereas this candle is closed below. This could tell you, boom, I'm in the right order block. Go into your 5-minute zone, 5 minutes. You don't even have to catch the initial move, because we come back nicely into this order block. Literally tip that order block and we're gone. So in the higher time frame, we confirm that there's a lot more long people going long than short. See how the market came up. There's a lot more longs in the market than shorts. That's a signal that smart money is getting in at this zone. So that's how we can use VIX when getting in. And I'm sure if you look at US 100 or US 30, this will probably be a lot higher actually, because this was a strong option on that day. You can see how price was so strong. Something weaker, when was this? Tuesday at 10. Maybe US 30 was weaker that day. Tuesday. Where was that? Jan 23rd. Yeah. Yeah, guys, this is something for you to research using your correlation pairs. So let's just go back to the dollar. And then let's bring in something like UJ. Another thing we can use it for is confirming our order blocks, okay? So UJ is a direct correlation to the dollar. So if we had this change in character here, we had our order block up here. Our supply zone. We draw it out on USD JPY. You can see how it confirms our entry for us. So you must compare the lows and compare the highs, and also compare for order block entries, continuation, as well as breaker blocks. I'm going to take some more examples for you guys of using correlation as screenshots, and I'm going to put it in this PDF for you. But let's just talk about the DXY now. So when trading the currencies, we use the USD index to determine the current market tone. So I always like checking the dollar, especially after news. We should be seeing gold go up now. Yeah, you see how gold's coming up now, because gold is a inverse relationship to the dollar. If we add, you can see price come back up. See if this area holds here in gold with this area in the DXY. So this is something we can actively look at now on how these zones play out. You see how the dollar's dipping into this zone now before gold is. That's kind of telling me that the dollar wants to push through here, maybe into this zone. So the dollar always leads a little earlier than the pairs. See how dollar's reaching and gold is still waiting, because people react to the dollar first. Well, smart money reacts to what the dollar is doing first and then brings it into gold. Now watch gold come up. So if we look at the news events, how can we determine what's going to happen in the market? If the dollar has negative news, aka risk is on the market, the dollar falls. So risk on, dollar falls. Risk off, positive news, dollar will rise. this is over the span of the day. This isn't going to happen just as the market opens, because there's massive volatility, and you know how these algorithms like to take out stop losses before doing their real move. So they'll push it the opposite way, the market makers, the guys with the trillions, just to take out stop losses and go down the rest of the day. So if the dollar goes up, commodities, equities, and foreign currencies will be going down. If dollar goes down, commodities, equities, and foreign currencies will be going up. So given this inverse correlation of pairs, when price on the one has lower lows, it is expected that the one should reach the higher highs. Okay. I just want to maybe open this up for you guys now to chat, because I think I've kind of gone over it enough, and we'll see it with oil as well. Kind of an inverse relationship, whereas oil also has an influence with, Canada has one of the largest oil reserves in the world, and then Saudi Arabia as well, and all those countries producing oil. But you can see how dollar reaches its high well before oil reaches its low, and how much time there is in between that. So I think oil could come down a little bit more before going up. See here, dollar reached its low well before oil reached its high. Dollar reached its low a little bit before oil reached its high. But something I want to trade a lot more this year is oil. Sounds like a weird thing to trade, but the spreads aren't that bad. And the movement's quite predictable if you use the dollar. So yeah, guys, let's just do a round of questions. I want everyone to have something to say. Charles, you just unmute yourself and speak. It makes sense because dollar value will affect pricing in commodities because of foreign exchange, and everything is valued against the dollar. 100%. Hit the nail on the head there. So I'd say oil, you can see, is probably the slowest to react. Gold reacts quite quickly, but still, look here. Dollar reached its peak here. Gold reached its peak here. See how it had a lag in time, but we had a divergence there as well. Opposite things are happening in the market. This is flat, this is down, so we know market should correct itself. If price goes lower, price is going well higher in gold. So this is SMT divergence, using markets that are correlating and inverse relationships. Yeah, if we can just do some questions. Today was a quickish lesson, but a necessary one for you guys while you're working out your trading plans. I do watch, like, say for gold on this, I was watching this order block here. You see how it tapped right in when this was tapping in. That was the perfect entry. Extra confluence to go short.
Can you hear me, Jared?
Yeah.
Yeah. Okay, so what I'm seeing here is, particularly with the divergence and stuff like that, using the dollar index or whatever, it's a lot better than using any other indicator because it's not lagging, it's like live.
Exactly, yeah.
Yeah, okay.
Because everything's following the dollar price, and news affects the dollar before it affects the stock market.
Yeah, it makes complete sense. Thanks. This is completely new to me, but it makes absolute sense.
Awesome. Glad I could help, bro. Sounds like you're in a freezer there with the fans going.
Yeah, aircons, it's Durban, it's hot.
Lekker, bro. Brandon, you got any questions?
No, I'm all good, bro. Shot.
Lekker. Warren, and then we'll go to Stu.
Hey, Jared.
How's it?
Yeah, today got me a bit stumped, actually.
Okay.
Yeah, I was in the British pound and the Japanese yen. So obviously, I was in sales, and it just went.
GJ.
Yeah, GBP and GBP and the JPY.
Yeah, GJ, yeah.
Yeah, it actually, I didn't expect such a like a move, actually, because it was it was heading toward, it was in a range, and I thought, I didn't expect it to. I mean, it like broke out of its range completely. So I'm actually still stuck in trades right now.
Okay.
It's not looking great. So I'm hoping during the night it will, obviously when Japan wake up and stuff, it should rectify a little bit. I know there's a speech tonight, Biden's speech.
Yes.
I don't know what time, because I actually got a bit confused with the time, because obviously the times on there are US times and not South African times. I used to have an app that I used to trade with, which used to give me South African time, and I don't know if it was Forex Factory. I mean, I haven't traded in about a year or so. So there was an app that I used to have on my phone that every morning I would check and see. But maybe it was the Forex Factory app, but I don't know. I don't have it on my phone. I just obviously when you Google it and it gives you the Forex Factory. But I used to have an app that every morning I used to check. It's today got me quite badly. I mean, yeah, I've obviously funded my account to increase my margin and stuff like that.
Yeah.
But,
Okay.
I don't know if it's. I mean, yeah. So what have you got on the screen there?
I'm just looking at the higher time frame for GJ. The reason price is going up is there's a massive fair value gap left here on the daily.
Okay.
With a change of character. So let me just get rid of this. We see price consolidated in this area for a while. We had a massive breakthrough and change of character at the same time. And this day is our order block, which caused this move. Left a fair value gap there. It's tapped into it twice, but it hasn't mitigated it halfway. So if we look at our fib.
Okay, cool.
Only if price was had tapped through this 50% of this fair value gap, would I call this fair value gap mitigated to look for lower prices? So I would never have gotten a GJ short today, unless you see that was a good short.
Yeah.
But
I was no, I was actually not in that short. I was in the the next high. So which was the lower high, the next one.
This one here.
Obviously. No, go left. that one, yeah. No, right. So that would be the lower high.
Okay.
So
So
obviously
look,
I got-
so when you're shorting against the daily range,
yeah,
let me just say one thing. If you look at price, if this gives you a change of character in here, a double entry, say your entry was here, which is a good entry. Because it's against the daily narrative, I'd look for price to come below the 50% into a discount for them to buy. So you see how price came literally into the 50% and went out. Came into an order block right here. So next time, note this down on your trading journal. If you find a good short against a long bias, this is where you take your take profit. Is the last swing, price has to come down into the 50% zone to then mitigate an order block or fill a fair value gap here.
yeah. I saw
Okay.
that. But there was there's also a fair value gap further down.
Yes, 100%.
Which I expected it to actually go into. That's where my take profit was.
Yeah.
But I did, to be honest, I took profit at the perfect spot, to be honest. But I entered again. on,
Probably here.
I can't remember to be. Yeah. Yes, that's correct. I actually no. I entered after it broke the lowest low. I entered again on a sell. So when they were equal lows, because so it went down obviously in profit, and then it just shot. Then I realized that there's news, but I didn't expect the news to. I mean, Britain don't normally move it so much, you know.
No, they
was
do.
a big move.
So in GBP, they're the second biggest market movers, so you got to watch out for them.
Yeah, they did. They caught me completely by surprise.
So I would have taken profits underneath this 50% zone.
Yeah.
You know what, Warren? All you can do is learn from it. Okay, so you took profits, say 50% here. Then once you see a change of character, that's when you automatically exit your trade. This is when you would be out here. That high was broken. You see that?
I think the time it was like 5 a.m. or something.
If it respected this order block and went down, then you stay in the trade. But as soon as it breaks that level, I'd have bought my stop loss to right here. And if it breaks that, it's fine. If it carries on down, then I can ride these lows.
Yeah, it was silly. I shouldn't have. But anyway, I'm still in it.
Where's your stop loss?
Well, no. I'm funding it. So at the moment, I'm gonna have to see it up and trade it down again to get a with what do you call it, a retraction.
Okay,
and then exit before.
I'm just worried for you because there's a massive fair value gap above here and relatively equal highs. This high will get taken, then this high, and then we enter the fair value gap. And you see how our price has just been going bullish the whole time from here. So if we break this high here, this becomes a strong low. This won't be broken. Then we'll create another weak low somewhere around here to then change your character. Yeah.
Well, it's already changed character anyway on that high. But I've got to try and. I mean, might have to hedge it.
You could hedge it if you wanted to. Are you familiar with that? I'll talk to you. I'll talk to you on WhatsApp after this. Okay.
Okay. I don't like it, but
yeah. Okay, cool. I'll chat you on WhatsApp and see what I can help you with.
Okay. Thanks, Jared.
Okay, cool. Okay, guys, if there's no more questions for today, I'm going to end now. I'm going to record a YouTube video quickly on some stuff, and I'll send it to you guys. But yeah, I'll put some notes in the resources tab and the recording as well, so you can go over the beginning half of it. But yeah, thanks guys for Thursday. Next week, I want to see your guys, if you can send through to me your trading plans. And if you've done some back testing, send to me. I can always check it for you and stuff like that. And yeah, also post in the Discord, guys, in tier 1. Go to student charts. Post your charts up there. I'm sure guys will have a look at it, comment on it. I'll have a look at them, comment on them. And that's how you can learn, is by drawing up your own charts. Once a day, go look at look for 2 setups you're looking at, and I can maybe help you by commenting and saying you've done this wrong or that wrong, or looking great, etc. And yeah, I'll chat to you guys. Oh, Shaw has said something. Same as my S&P short, lower fair value gap never happened, bounce off at the first one and 50%. Yeah, dude, that is literally where I took my profit yesterday. If you look at my trade that I shared, that is exactly where I took profit on S&P yesterday. That was my TP right there. So let me go to it. It was, which was it? On the 1 hour, I think. Yeah. Get this stupid tool off. Where was it? Yeah, here. So this is what I saw. Liquidity taken. Liquidity taken on both sides. Okay. And then we go into this fair value gap here. As well as, I think it was on the 15-minute. Yeah. This breaker block here. I think it was a 30-minute breaker block. Yeah, it was on the 10-minute. And I went short here with my stop above this candle. And then fib retracement tool was from this low here. I saw these equal lows, and then I saw this fair value gap here. So I knew it was going to tap into that area. So my TP was here. Now it's 4-to-1 trade. Oh, 7.3. Yeah. That's what I saw yesterday. And obviously the change of character was in here. There you go. But I'm going to talk about how I trade daily on S&P like this during New York session in tier 2. So for now, I'm just focusing on teaching you guys higher time frame setups. As you see in the lower time frame, how fair value gaps are respected a lot more in S&P and NASDAQ, etc. And I solely trade those. Like if you waited for this order block here, you would have missed the whole move down. And I look for double takes of liquidity beforehand. So as market opens, takes one side, takes the other side, change of character into it. But yeah, Charles, I don't know how you got in that trade, but that was sick. Well done. I see you got on the 1 hour. Oh, you got in on this order block, yeah. Oh, you got to go back in time. Yeah. I remember now. There we go. Yeah. That was a good entry, bro. Good entry. Change of character, everything in there. Little liquidity grab on the upside. Cool, guys. I'm going to end it now. Wasn't bad at 3-1. Yeah. Mine was a bit wilder, but getting there. 100% you're getting there. I can see you understanding it. But yeah, just remember that 50% rule. It's crazy how the market just comes back there just to grab liquidity. Like, even look at this move up. Price just literally comes into the 50% order block to continue up. And then you see how price hits the 61.8 above it to the T the next day with a continuation up. But yeah, Shaw, well done. That was good, bro. Okay, guys, that's it for tonight. I'll be back on Monday. I'm going to record the lesson beforehand because I will be in France. I would have just arrived in Paris, so I will upload the video to YouTube unlisted and then share it with you at 8 o'clock. Watch it, and then I'll jump on after the lesson to do some questions. Okay, guys, it was nice chatting. Chat to you soon. Peace.